So with no further ado, I'm going to hand over for this very interesting discussion about the remittances and savings behavior of financial behavior of migrants for Lakshya's study. A couple of quick housekeeping points, and in terms of format, Lakshya will be speaking now for the next 25 minutes or so. Rupal will then have about 10 or 15 minutes to respond to the paper as well as provide her insights. And then we'll do about 10 or 15 minutes of Q&A right at the end when I'll come back. Just a quick request to everyone who has joined in as an audience member, please do send in your questions at the Q&A box that you see, and then we'll triage them to Lakshya and Rupal at the end of it. And of course, I think we have microphone controls, but anyone who's not speaking, if they can just check that the microphones are off. And with no further ado, over to you, Lakshya, and thank you all for joining us.
Thank you, Malvika, for that. First of all, I would like to again thank Malvika and everybody at Dwara Research for supporting me throughout this study and also giving me this opportunity to present this paper. And I would also like to thank Rupal for agreeing to become a discussant in this webinar. So without much further ado, I would now like to share my screen and I'll start my presentation. Just a second. Yeah. So I would first like to start by providing some background to my study. And so my interest in financial inclusion and mobile-based financial services began with my first internship with Dwara Research back almost a year ago, where I was asked to research on different initiatives of mobile banking and payment systems for low-income households in different countries. Herein I saw a lot of initiatives in a lot of countries which focused on providing payment services, mobile payment services and banking as the first step towards financial inclusion. So after researching more, I found that specifically in India, that low-income households were considered as a homogeneous entity while talking about financial inclusion. And here I always felt that that was not the case, because my low-income migrant households I felt represented a separate category of low-income households because of their uniqueness in terms of mobility and change in location that they experience because of the nature of their work, and the kind of risks and vulnerabilities that they face are different compared to other non-migrant households. Um, and also further research showed that there was not enough literature on internal migrant households' financial needs in India. So I felt like this was a space which needed attention. This was a space that needed more work, and my interest in mobile banking and mobile-based financial services combined with a form of combined with the kind of gap I found in literature for internal migrant households' financial needs, I decided to combine the two and formulate my paper on it. What I was helped by the fact that there's a hype that over a couple of years, there's been a high penetration of mobile phones and smartphones among workers in India. And I also had access to migrant workers employed in apparel manufacturing industry in Delhi Gurugram Industrial Corridor. Therefore, I finally decided to examine whether migrant workers were using mobile-based financial services or not. And therefore, I formulated the following research questions. The first question looks to examine the impact of mobile-based financial services on the financial choices of migrant workers in Dundahera. The second question basically looks at the main barriers to this adoption. And the third one looks at the impact on savings for migrant households that mobile-based financial services have had. So for this, I surveyed and interviewed 70 workers employed in the apparel manufacturing industry in Dundahera and Manesar in the Delhi Gurgaon Industrial Corridor. I conducted the surveys and the interviews for over a month. My research methods included qualitative and quantitative methods, a survey, and unstructured interviews. The migrant workers that I surveyed are not seasonal but semi-permanent workers, because they usually are employed within the industry for almost 8 to 10 months of a year. So this is just the basic methodology part that I used. Um, Now moving on to the first question, which is to examine the impact of mobile-based financial services on migrants' choices. For this, I first looked at their current practices as to how are they paid, and how do they operate their bank accounts, and what are the different financial activities that they indulge in. And then I looked at what are the different kinds of channels they use to conduct their financial activities. So the three financial activities that I looked at were remittances, their payments, which were day-to-day payments, and then their savings. The existing channels that they use at this point in time were, for remittances, workers mostly use local money transfer shops and friends and family. Local money transfer shops were of basically two kinds. One were Aadhaar-enabled payment shops, which transferred money just on using just the Aadhaar card of the workers, and the others were like private agents and Hawala couriers, which aren't legal methods, but they have also existed within the place where I conducted my study. Um, for payments, cash was the major source, major medium, and for savings, workers usually send their extra income back home for their household expenditure, and then the household was responsible for ensuring any level of savings. So these are the this was the existing condition, and I wanted to see how do they get paid in order to judge the impact of mobile-based financial services. So the first thing I looked at was how are the workers paid. I found that almost 70% of my respondents were paid in their bank accounts, and the rest were paid in cash. Uh, More than 70% preferred to be paid in their bank accounts rather than cash because of safety, convenience, increase in savings, and ease of operating their bank accounts using mobile phones and debit cards. So the workers reported that there was that when they were paid in cash, there were issues of safety and issues where people like thieves would steal their money, because everybody within the industrial town knew when people get paid, so they would target the workers at that time. But paying paid in their bank accounts meant that they did not have, so they overcame this issue. Convenience, because they felt that they did not have to stand in lines outside bank branches to deposit the money that they had, their wages that they had. It also helped them increase their savings because they only withdrew the amount of money that was required. So this kind of limited their liquidity, which kind of helped them increase their savings, because they felt that if they had cash all the time, unexpected expenditures always came up and they ended up spending more than they should have. And again, they felt that by using mobile phones and debit cards, they were easily able to operate their bank accounts. The second step was to see how do they operate their bank accounts. And herein I saw that the workers, almost 50% of the workers who were paid in their bank accounts, used mobile phones to operate their bank account. Whereas the workers, and similarly, 50% of the workers who were paid in cash, use local money transfer shops to operate their bank accounts. So I could see that the modality of wage payment had a visible impact on the mode used to operate their bank accounts. So from here, what the fine my results showed that for specifically for the remittances, that people who were paid that almost 60 workers remitted regularly, and workers who were paid in their bank account and operated their bank accounts using their mobile phones also used they also used mobile-based financial services to then remit money. And they used platforms like Google Pay, Paytm, and PhonePe to conduct these transactions. Similarly, workers who were paid in cash uh, operated their accounts using local money transfer shops and also remitted money using local money transfer shops. So the major takeaway from this was that mobile-based financial services and local money transfer shops were operating as opposite institutions for remittances. And the one of the major factors on how workers were choosing between the two was based on how they were paid. And also sometimes some of the workers reported that it was based on the amount of money that they had to transfer, or the amount of or the transaction ticket, that if they have to send a higher amount of money back home, then they would go for local money transfer shops. But if they had to transfer less amount of money, they would use mobile based financial services. I will get to why this was so in the following slides. um, the other thing that I found was that the workers who were using mobile-based financial services reported the following as as the major benefits of using mobile-based financial services. The first one was safety. They ranked safety as the first benefit because they felt that by doing this, they were able to transfer money from the vicinity of their house. They didn't have to go out anywhere. Second one they felt was convenience, because they felt again that everything was happening over the phone. They did not have to go to the bank branch to stand in lines. Third one was speed of transaction. They felt that they could now send money back home whenever needed in any emergency situation in the middle of the night, even when the shops are closed. They could always transfer money. And finally, the cost of transaction, which they felt had come down because local money transfer shops charge somewhere close to 1 to 4% of commission, depending on the amount of money workers were remitting. Another benefit that I did not actually anticipate while conducting my study was, and which was then reported by the workers, was that they felt that mobile based financial services provided rewards like cashbacks, which I'm sure everybody would know. Like in terms of Google Pay, you have those gift cards, and which was a big incentive for workers to use these platforms, because they felt the more number of transactions they made through these platforms, the higher chance of getting a reward or cashback, which then they felt added to their entire income. And there were many schemes that workers were they would transfer they would to increase the number of transactions. They would send money from one worker to the other between the six of them, and all six of them will have then six transactions, an equal chance of getting more cashbacks and rewards. So this was something that was I did not anticipate, and it was one of the benefits that the workers reported. And finally, towards the end, I found that that these benefits actually led to an increase in household savings for the workers. The workers who were using mobile-based financial services started saving more in their bank accounts rather than sending it back home. They were almost the ones who were saving in their bank accounts. Almost half of them were saving more than 5,000. Were able to save almost 5,000 rupees per month in their bank accounts, and this was all because of the benefits that they felt from the benefits of the mobile-based financial services that led to this increase in their average monthly savings. um, Now I will talk about the barriers to which the workers felt while adopting mobile-based financial services. Here I have categorized the barriers into two major components. The first one are gender norms, and the second one is trust and confidence. Um, workers felt and reported that gender norms, which I also saw, that gender norms limited women's usage of mobile-based financial services. For example, in terms of access, women had equal access to mobile phones and bank accounts, but they did not have, but they weren't accessing financial services through mobile-based financial services. For example, as a percentage, as a percentage, less percentage of women had internet-enabled mobile phones than compared to men. Similarly, in terms of usage, um, this was a very interesting thing I found, that almost 7 women workers reported that their family members operate their bank accounts, whereas none of the men reported the same. So this was indicative of how women's agency was restricted over controlling their own finances, even though there was no difference in terms of education, in terms of age, or in terms of even job title. Most women were employed as tailors, just like men were. They were earning similar amount of money, yet they did not have access. They did not control their finances, because that was strictly kept for the male member of the household to control. Another thing women workers reported, that their main usage or their main need for money was to buy items for their kitchen items and household needs, which were usually paid for in cash. So they did not have the need to use mobile based financial services. Although some women did report saying that they had started using uh, mobile based financial services, and it had liberated them, because now they did not need to step out in like go to bank branches and stand with men. They could just conduct their business from their house, from within their homes. It like one of the women's workers reported that it allowed her not to carry her handbag to work, which for her um, was a big plus, because uh, the less amount of stuff they carried to work, the more free and independent she felt. So, and only 6 women, in fact, reported that they use mobile phones to operate their bank accounts. The second barrier, which limited the use or adoption of mobile-based financial services, was lack of trust and confidence within the technology. For this, I would like to first highlight two different things: that the existing options for payments and remittances, which are cash and local money transfer shops, were working, were available, and were working effectively. Um, in terms of local money transfer shops, the benefits were that they were the people running these shops and the workers had interpersonal relationships that had built over a period of time. So they could hold these people accountable in case of any transaction failure, or any time their transaction doesn't go through. So this kind of instilled faith within the local money transfer shops, and workers did not mind paying a commission for it, because they felt that if anything wrong were to happen, they could always go and speak to the person at the shop. Whereas in terms of mobile-based financial services, this wasn't the case, because um, network connectivity, for one, was the main impediment to adopting mobile-based financial services. Instances of server down um, majorly limited the benefits or undid the benefits of mobile-based financial services, because in cases of emergency, if the server is down, then it doesn't make sense for it doesn't mobile-based financial services don't make sense at all, because they have to that's like one of their main USP. Similarly, anytime transactions didn't go through, or transactions or money got deducted from their account but did not reach the beneficiary's account, the anxiety over delay further discouraged workers from adopting the services. Um, Thirdly, they felt that they could not, whenever they tried to reach customer care or customer support, it was not as smooth as it should be, which further then alienated them from the technology. And finally, instances of online fraud completely discouraged workers from picking up mobile-based financial services. At least five the respondents in my study reported that they had been victims of online fraud. Further, further even authorities didn't help them enough to get their money back, which and such instances usually, because of the kind of network that migrant workers have, these kind of news spread like wildfire, and it influences other workers as well. And they said that the existing systems work for us, so why do we need to shift from the existing ones to the new one? So these are the two main barriers which I found during my study. Finally, the impact on savings for migrant households from use of mobile-based financial services. Here, I would like to talk about three things or three aspects which I feel need to come together for migrant households to effectively utilize their remittances in order to enhance their well-being and also increase their savings. And the three things are targeted financial products, social security measures, and sustained flow of remittances. Now, sustained, we like from what my study showed that remittances within the migrant workers that I had interviewed there was a sustained flow of remittances. However, their expenditures were so much that they could not actually save enough to enhance their well-being and their socio-economic status. And that is because as many a lot of literature shows that workers, and also the workers that I interviewed reported that they did not have the documents, or they could not actually comply with the know your customer details with the banks, and that's why they were excluded from formal financial products, and they were also excluded from social security measures that would otherwise help them. Social security measures like housing. Like housing was a big issue that workers reported, that the landlords ask them for exorbitant rents, and they increase the rents whenever they feel like. Similarly, they couldn't access formal credit because they couldn't comply with the KYC terms. Healthcare, and also education of their kids. So all these things ended up were paid for by the remittances that they had. So in by the end of it, remittances could not translate into higher savings for migrant workers. And for that to happen, these three things have to come together. Is what I came to a conclusion when I was researching on this particular question. Finally, there were three topics of discussion that I felt needed further research, and something that came through the study, but obviously it was beyond the scope of my study. That to remittances and savings. Now there is a reports suggest that 90,000 crore market for remittances, internal remittances in India. Now, the external migrants who are one of the reasons why they have been able to enhance their socio-economic status within society is because of formal channels of remittances. They banks they transfer money through banks mostly. For internal migrants, that has not been the case up until now. Mobile-based financial services has the potential to create formal channels for workers to transfer money back effectively, cheaply, safely, and this is something that needs more research as to how to or to find ways to enhance the adoption of mobile-based financial services by overcoming the barriers that I have just pointed out earlier. Similarly, the second point of discussion is wage payments in bank accounts. Now, as I have seen in the first question, that payments in bank accounts led to people using mobile phones to operate their bank account, which led them to also use it for remitting money. But this is a long exercise. This is how to ensure that employers pay the workers in their bank accounts. Now, this is a long exercise. It isn't something that I have the solution to, but this is something that has shown positive effects. And if it is happening, then it has a positive effect. So again, like this is something that requires more research. There are many efforts that are made I know a lot of exercises being done by Women's World Bank in Philippines trying to do something similar to incentivize workers to pay, incentivize employers to pay the workers in their bank accounts. But similar kind of initiatives are not happening in India at the moment, or I am not aware of them. And finally, the third point of discussion which needs to be looked at is women's use of mobile-based financial services. The labor force within the apparel manufacturing industry was 50% women, and none of them were you. And if they are not using mobile-based financial services, then it is we are letting go, or we're letting go of a huge potential of workers who could then of the ability of women workers to actually take control over their finances. And because it gives them it mobile-based financial services provides them with the uh, incentive to actually be able to work from financial access points were shut off. Workers did not have any way to access their finances. So mobile-based financial services actually gives workers and women workers the ability to control their finances from wherever they want and transfer as much money as they want, or and completely be in control of it. So this is again something that how to increase women workers' adoption for mobile-based financial services is another thing that requires more research. And with that, I think I'm done with my time as well, and I'll conclude with that.
Happy to hand over to you now, Rupal. Please do begin. And thanks, Lakshay, for that very quick canter through. I know there wasn't much time to go into methodology with a longer slot allows, but thank you very much.
Thanks, Malvika, and thanks to Dwara for putting together this webinar series. I think really appropriate timing in terms of the segment and what we've seen through the course of the lockdown as well. And Lakshay, congratulations on putting out a really good paper. I'm always quite happy when people research migration and financial inclusion, because I think it's one of the most under-researched subjects. And as you pointed out rightly, that migrants themselves are a very heterogeneous group. So there's definitely a call for generating more knowledge, not just for the sake of understanding it better, but also to inform product design for this particular segment. So I think your paper really, in many ways touched upon some really key debates right now that we're having at the intersection of labor, migration, and financial well-being. And I think it definitely leaves us with plenty to think about. Broadly, if we look at it, I think it falls largely in three key buckets, and I'll spend a little time on each of them. One is definitely the nature of employment and the influence that it has on adoption of financial services that are mobile-based. The second one, of course, is the perception around technology and its use case for different segments within migrants as well. And the third big piece, definitely, as you pointed out, is consumer protection when it comes to digital financial services. I think in nature of employment, what some of the data in your paper really brought out is this whole idea of digital wage payments. I think nearly 73% of your sample received their wages digitally. Now, these are more likely to be formally employed workers who are on the rolls of this particular employer. The reason being that the moment you have a formal wage payment that is on record through your bank, it's indirectly, it means that the employer is acknowledging that you work for them, which also implies that the employer is now liable for various social protections under the law, which are ESIC, EPF, possibly other forms of insurance. And I think in many ways that probably might explain why that particular segment, the 73% in your sample, why they seem to have higher savings rate or lower expenditure rates. Because in many ways it is offset by really strong social protections brought on by formal employment. which in a way is reflected in wage payments happening digitally. Also, I think the nature of employment in terms of the sector, stable employment. So these are workers who have a fixed wage, who are not paid piecemeal based on the output they produce. And they're also stable with the same employer for an 8 to 10 month period. Definitely makes it easier for the employer to, kind of make wage payments digitally, as opposed to say someone in construction, for instance, where the churn of workers definitely seems to be much higher and therefore poses a challenge. So I think the big question that your paper in a way is also pointing to is that if we acknowledge that receiving payments through bank accounts in a way promotes the adoption of mobile-based financial services, and at the same time brings on a host of other social protection measures, then how do we really incentivize informal sector employers to adopt digital means of wage payments? Because I think bulk of the challenge lies with that particular group. And of course, the degree of challenge varies depending on which sector, whether it's apparel manufacturing, construction, and so on that we're talking about. I think the second big theme that your paper in a way touched upon is the perception around technology and its various use cases for different segments. Definitely in your sample, it seems to be much younger. People aged 18 to 28 seem to be the dominant group with basic literacy levels and also prior exposure to both banking and mobile-based services. So I think these definitely matter. But, I think vocabulary of mobile-based financial services also matters. And Malvika and I were talking about this earlier in another discussion, that a bulk of the digital divide that we see between men and women largely also has to do with vocabulary. Words like server, timeout, bandwidth, etc., don't exist in traditional language. And we really need to think of a way to make technology more inclusive in terms of just its vocabulary and language for groups like these. And in case of women particularly, I feel that, especially with remittances, both access and usage largely rely on the confidence of the receiver. So the migrant at destination might be more kind of fluent with technology, might be more exposed to it. But whether or not it is adopted across that loop of source and destination is how confident is the receiver, in this case, mostly women or elderly members of the household. And what is the kind of infrastructure that one has access to locally to access mobile-based services there? Because like you said, in an urban setup, it is possible that people might accept payments through Paytm and GPay and so on. But at the receiving end, where bulk of the consumption needs are, the local economy still operates on using cash. So these things do matter in the adoption of technology by women as well. And I think, the value of money is more abstract when it is not held physically. Now, interestingly, in your case, it seems that that abstraction in a way leads to greater savings or greater usage of digital payment channels and so on. Dan Ariely has actually written a lot about this, where you see the reverse effect, that because the idea of money is so abstract because it's not held physically, you're more likely to spend more. So it would be interesting to see how that works out with migrant workers in particular. Does it actually encourage savings and digital payments adoption, like you say? Or does it actually result in higher expenditures and higher indebtedness, as we see some other studies looking at as well? I think you touched upon some really interesting use cases. The biggest one being the difference between safekeeping versus savings in a bank account. Our own experience at Shramsaarthi, in a way, tells us that a lot of migrants who've adopted, banking largely do it for safekeeping. So what that means is that still poses a challenge for adoption of other digital services, because you're only keeping your cash safe there. But ultimately, all your transactions are happening in cash and it's still cash-based. So really interesting distinction between use cases there as to who is using it for safekeeping versus who is using it for actual savings and transactions. I think with women in particular, we've seen that a lot of the digital adoption has been around information alone. So a lot of the women we work with in our own work on digital services, we've seen that just knowing how much is in their bank account and how much money came in and how much was withdrawn in itself is seen as a very, very valuable service. And it's largely something that women seem to be valuing more than men. So again, the same platform, the same product, but a very different use case for a different segment. And similarly, in certain communities such as ours, we also see bank accounts being largely used for direct benefit transfer receipts, not so much for transactional purposes. And at least in common language, there seems to be a distinction between bank accounts used for receiving benefits versus bank accounts used for actually performing various transactions. And within all of these, I think it would be useful to see how informal systems of both remittances, savings in a way interact with formal systems. We saw a lot of this happening in ways in which families coped during the COVID-19 lockdown, where we saw families receiving government benefit transfers to obviously manage expenses during this time, but at the same time relying heavily on sale of assets and informal sources of credit and informal sources of savings as well during this time. So while we don't see it replacing and then informal services, it's not an either or. But I think it would be good to see how the interaction between the formal and informal kind of evolve over time as a result of adoption of mobile-based services. And lastly, I think you really hit the nail on the head when you spoke about consumer protection. I think even in our work, I think one of the biggest challenges to adoption of such services is the extent of fraud, the lack of transparency that actually exists within these systems, particularly for households and consumers that have low levels of literacy or no levels of literacy. I think with systems such as AEPS and Aadhaar Pay, new kinds of frauds are becoming possible. With the transaction failure rates that we see with AEPS, very often it becomes justified to also use that as an excuse to process fraudulent transactions in low literacy communities. And I think the question there really is that who is really responsible? Do we hold banks responsible for how their agents and sub-agents behave? Are governments supposed to be held responsible when they're transferring direct benefits to these communities? Because we've seen that it's mostly women and men who receive benefits under the PM Awas Yojana or any other direct benefit transfer who are most affected by such fraudulent behaviors. And also the fact that a lot of social protection schemes today seem to be converging at the banking level, I think creates a lot of pressure around mis-selling by bankers as well, and fraudulent enrollments within certain social protection schemes as well. So I think a really good question. I'm not sure we all have the answer to that right now, but I think definitely raises good questions around the role of consumer protection in improving the adoption of mobile-based services, particularly among low-income and low-literacy migrant communities. So thank you once again. I think these are really, really good questions for students and researchers and even practitioners to explore going forward. And I really hope that we see some sort of positive effect, of all the technology that's coming up and in minimizing the digital divide, at least that we see among different segments. So thank you, Lakshay. Thanks. Over to you, Malvika.
Thanks, Rupal. And it's always great to get a reality check from you, which is also so nuanced and thoughtful. And I think we already have some questions which have come up. So happy to jump straight in if that's fine for both of you. Unless you had anything to respond, Lakshay, in which case now is the time.
No, I have not.
Great.
No, I think I have not.
Great. So I think Ashna had asked a question about the most popular mobile apps. I think you had mentioned Google Pay, PhonePe, and Paytm when you were talking. Is there anything else just on the basics? Do those remain the same? Because the next question, which I hand over to both of you, is has COVID accelerated any of these trends? I think that's because obviously this research was completed just before February. So maybe if you can hand that over to both of you, both on the apps and what COVID has done to these trends.
Lakshay, do you want to go first? Hello?
I think Lakshay may have dropped off, Rupal, so you can go first in that case.
Sure. I'm not entirely sure around COVID accelerating any of these trends, although I think one big trend that we did see happening as a result of COVID were direct benefit transfers coming into people's accounts. Um, One of the things that we were witness to were serpentine lines outside banks, where women were largely walking long distances in the summer to get to banks so that they could access their bank accounts. There definitely seems to be more awareness on different ways of means of withdrawals. So here it's commonly known as Angutha Wala, which is the AEPS and Aadhaar Pay transactions that we see. I think what it brought to our notice was also the unfortunate burden it puts on women to really access banking in order to pay for household needs, at least during this time. Because much of the benefits were routed through women's bank accounts. So the actual journey of having to access the bank account, take the money back home, largely rested with the woman, but we're not entirely sure how much control did women really have over the monies that came in. So I think people understand that direct benefit transfers do come into their accounts. In urban areas, we did have workers more fluent with GPay, PhonePe, Paytm, and some of the cash transfer programs that we did ourselves. But I wouldn't say that there's any big shift in the way in which usage happens through these accounts or through these digital channels.
Similarly, adding to what Rupal said, that during the first 60 days of the lockdown, I had the chance of actually interviewing a lot of construction workers in Maharashtra, and they said that they have no way of accessing them because they were at that time stuck or were held at their construction sites or where they were working, so they weren't allowed to leave. So they had absolutely no idea or no way of accessing any kind of financial services because financial access points were also shut. Like Aadhaar enabled payment shops were shut. Similarly, near where I stay, I have a couple of Aadhaar enabled payment shops which were again not functioning. And once they did start functioning after the first 60 days, there was huge, like you said, huge lines of people standing there just trying to access their funds. And in that time, I am not sure whether it led to them shifting to Google Pay or any of these digital payments systems. But yeah, although, however, there have been, from the people that I interviewed, they were aware that these things exist, but they did not know how to do it because most of them did not have smartphones, and USSD based transactions aren't popularized neither by banks nor by any regulators, and that is something that is again a larger political question as to why that is so. But that's mostly my take on this.
Yeah. Thank you. And we have another interesting question from Badal, actually, which maybe I want to ask a couple of questions that lead into what he's asked. I mean, the first one that struck me when I read this paper and also following the last 6 months is that when it comes to payments and remittances, we don't necessarily maybe see what you would see in the classic household finance literature in India, that households cycle between one form of savings or loans and another. So you will have a portfolio of informal credit and formal credit. And one of your findings was, of course, that once people started getting those wage payments, at least in this segment of workers, which are definitely better heeled than most, they were sticking. There was some kind of stickiness that once they started doing remittances in one channel. I guess one question I had is, I wonder if there was anything that came up in your research that gave you any reasons for that. And also, Rupal, do you think that, obviously this is a very small, non-representative sample qualitative work, but does that resonate with what you see on the ground at all?
I'm not entirely sure, Malvika. I think my own sense is that possibly comfort with a particular way of remitting and possibly prior experiences that have probably been negative with informal means probably add to the stickiness or probably help workers continue using a particular channel. We've not seen it with digital means yet. In our limited experience with a completely different segment, of course. But we definitely see the proportion shifting within our work on credit. So families who've had long-term positive experiences with dignified forms of credit definitely reduce their proportion of informal credit in their portfolio. It doesn't completely get eliminated, but I think they definitely find a sweet spot of formal and informal with a growing proportion of formal. That's my sense, but maybe Lakshay has different experiences based on the group there.
My experience, so I try to focus mostly on their savings products as to how they were saving, because I knew a lot of focus was already given to credit products in different kinds of, like even RBI talks about its in its household finance committee, where it says that migrant workers need to be given customized, flexible products, and most of the products that they state in that are credit and insurance based. However, there isn't much talk about savings products, and this is something that I found while I was researching or while I was interviewing, that workers are very, very particular about their savings. That they're very particular about. I asked them that has mobile-based financial services kind of helped you reduce over expenditure or unnecessary expenditure, and they became very defensive about this question. They said that do you think we do over expenditure? No, we don't. We ensure that we have account all our money, even the last rupee. So, and the other thing that was really stood out for me was the fact that many were now were saving in their bank account, which means that um, there can be instances, or there can be savings products that ensure that workers, when they are paid, let's say the workers who are using mobile based financial services, they certain number of transactions happen every month, so like when they get paid, that a transaction is recorded. And savings products that kind of work with similar idea, like let's say a cash reward, or which incentivize workers to save instantly in something or the other, is something that I feel uh, can work, because workers did say that they were encouraged to use those things because of the cash rewards and the rewards that they were getting for these transactions. So yeah, but I know that this is a very small sample size, and the workers that I was interviewing were better off. But I did sense that if such products exist, maybe workers may be incentivized to have formal savings as well, or invest in formal savings products. So this is my sense. I'm not too sure about credit because I did not delve into that category for my research.
And interestingly, and I think that distinction that you brought up, Rupal, about safekeeping versus savings is also a hard one to pick up from this kind of work, but maybe something we should do another follow-up study on. So there are a couple of connected questions actually now. One is on the savings side, where there has been an increase in savings. Pradeep Das asked, what is the primary reason for increase in savings? And I think, we have some knowledge from pre-existing work, but I'll let you maybe answer that, Lakshay. And a connected question, I'm going to ask both of them because they are connected. Badal Malik actually asks whether there's any interplay between small ticket credit with payments and savings for this segment. So almost a kind of, taking credit to make the remittance, if I understand the question clearly. He says, for example, remittances or expenses linked to residual savings only, do they need, for these kinds of expenses, do they need cash advances, for instance, for certain non-discretionary spends? I suppose in the sense of, do you need to kind of borrow to remit and then maybe pay that back from your salary potentially? So is there one, the first question I'll pose to Lakshay regarding why were they saving and what was the primary reason? And then maybe the second to both of you, in that, have you seen, or did you see in the study and in your work, Rupal, any interplay between taking credit and some of the savings and payments needs as well?
With respect to the primary reason for increase in savings, what the results showed was the fact that the benefits of using mobile-based financial services, which I pointed out, were that it was safe, the cost of transaction had fallen, the convenience that they could now transact with, in terms of they did not have to stand in queues and lose a day's wage. They did not have to pay a commission at the local money transfer shop. So all these things ended up. So when I asked them that how much change have you experienced in your savings, they said around 500 to 1,000 rupees extra savings than before, which in this respect was quite a big sum. So I would say the primary reason for increase in savings was the fact that now what the benefits that mobile-based financial services users were experiencing. At least this is what I know from the responses that I had received from the workers.
To Badal's question, Malvika, I think we don't exactly see it in the form that Badal seems to be suggesting, but we do see multiple systems of advances for payments or for expenses. So at least in the area where we work, and it's also given in literature in several other pockets of migration, that migration does begin with a cash advance, usually taken from employers or contractors, and then one works to pay off that advance, basically. So we do see those systems continuing to exist. In many cases, in the absence of formal services, contractors or employers become the default sort of financial service providers for these workers. In cities like Bombay, for instance, we've seen some really interesting, you can call it a cashless payment system, but we've seen instances where the contractor controls almost every aspect of the worker's lived experience in the city. So for instance, the contractor would be the one who owns the rental accommodation where the worker is. The contractor will have a relative who runs a kirana shop right next to it, and a tea stall right next to it. But there is no cash transaction that happens here. All the deductions happen against the wages that accrue to the worker. These are highly opaque, obviously. One could argue both sides and say that this is a highly effective informal cashless payment system. But I think the reality is that these are highly opaque and there are unfair deductions on wages. We do see other forms of advances against earned incomes. So workers typically will let the contractor or the kirana store owner at destination retain their wages. And then every week they will take about 200 to 500 rupees as an advance against what has already been earned. That's what they call kharchis in local parlance. It's not really an advance. It's just amounts taken against what one has already earned. But again, taken for small ticket cash payments made for, paying for services in the city. So we've seen a few examples of these, but probably not exactly as Badal suggests, where workers possibly borrow for remitting money.
Great. So we have a couple more questions just on savings, and I know that we're close to time, and I do want to return to this theme of gender, so maybe we can just end on that one, because interestingly, we have a few studies ongoing on this point, which have given us almost kind of slightly results that are in tension. So maybe we'd love to end on that one. A very quick question from Shubh Anand, which is just sort of risks to digital savings and what people see on the ground as the risky side of it, and that whole trust deficit that we often see come up. And I think it's connected from Sanket Mehta, is whether cash rewards or incentives can be used maybe either to overcome this risk perception or perhaps as a kind of gateway drug to digital financial services. So yeah, I'm not sure which one of you want to go for that first, but I'll leave it open to both of you.
I would just point out one thing here, that many workers, at least the ones that I said that report surveyed, did mention that there was a lack of, like you said, lack of trust within the digital system, with digital financial services. And that in itself, I think, hampers most of the other financial services as well. Like payments is like the first step. The next step can be savings and credit, insurance and everything. But even within payments, many workers are still apprehensive to adopt it. So then moving on to savings products and something like this is, I feel, is like the second step to it. And the trust factor really, like, I know for a fact that many young workers were also very sure that they don't want to use it. They know about it. They know that the local money transfer shop for payments works, and they're happy with it. So I think that with time, or I think with more efforts and initiatives of the government or civil society organizations working in this field to enhance trust within the system, within digital services, will then or should then incentivize workers to move towards digital savings as well.
Yeah, I mean, I'll probably answer the second question. I think providing incentives to adopt digital services might be a good starting point, I think, to get people on board. But my personal view is that having strong consumer protection measures that have been proven and strong redressal measures is what will help workers continue to use these services. Yeah, I'll leave it at that.
No, thank you. And I think that's a great segue, because I loved what you said about that accountability loop. And I think it came up in what Lakshya was saying as well, that people feel that there is someone that they can go to if something goes wrong, whereas customer support systems can almost seem distant and quite opaque. I think a connected point, and this is the question that maybe it's $1 million question still, but if we could take 2 more minutes of everybody's time, I think the concern for us really is that some of the work, as Rupal, you know, is showing, especially a study with Dr. Lina Son and another couple of studies we're just starting now, that in fact women's consumer protection needs might be very different from men's consumer protection needs because of the social structures that operate. So maybe for men, if you do have, you know, money going into that account, they start maybe having the ability to remit that more safely. When we have this finding around, you know, women's accounts being controlled, can we then advocate for a similar push for digital payments across the board? Because what if then that limited agency that might exist, or financial privacy that might exist for these kind of getaway funds that women often have, and we know that there's this kind of intraspousal spending needs are very different even in a household. So how do we reconcile this? Because on the one hand, there are some clear benefits that come from the security of these digital forms. But then on the other hand, obviously it's a tough question because women's digital use is so currently still restricted in our country. So I know we can't solve it in the last 2 minutes of the webinar, but I'd love to hear your thoughts of how you are reconciling it on the ground, Rupal first maybe, and then Lakshya, what you think as well. Thank you.
Well, that's a tough question, Malvika. You're putting us on the spot. I don't think we've we've cracked that yet. I don't think we fully have an answer to it. But I think the attempts that we have there is full disclosures when it comes to women consumers, kind of saying no when we feel that you know, the woman is definitely not someone who has control over her finances, trying to actively look for female agents where women feel more comfortable, whom they feel more comfortable interacting with, or potentially male agents also who seem to understand how to interact with female customers and so on. But I think disclosures definitely helps. What I've discovered is that women find information very empowering. And I think for us, that's a starting point in the work that we do. And hopefully we'll figure out the rest from there.
I'll just give like one of the women reporters actually reported this when she said that so she was a college graduate, and she was aware of mobile-based financial services. She knew that it was cheaper to use than to go to the local money transfer shop, but she was married to her husband didn't allow her to use any of it. So it was something that I felt was kind of indicative as to a lot that the gender norms or just the patriarchal nature actually just resisted even somebody who's aware of how to use these services, aware of the benefits of it, and yet are denied the benefits. Similarly, there were women who were using it and were trying to encourage other women to use it as well. They were trying to form collectives within the organization to encourage women to use mobile-based financial services, because they felt like one of the women actually said that I've been able to save slowly enough to be able to buy some gold for myself, which my husband doesn't know of. Because this is something that I've been able to do it because I know who is like, even when he or her husband would take out money from her bank account, she would get the message on her phone that this much money has been taken out, and she's like I'm able to take care better. I'm able to better ensure what is happening with my money, and then because of mobile-based this thing, I'm able to also control it without her husband knowing. So that kind of personal touch that mobile phones have, and that can be very empowering, and that is something that I felt can be looked into more, and something that is is a researchable topic later on as well.
And yeah, I completely agree. So I think on the consumer protection one, we've been struggling to find leadership for this for years now. It's something we always talk about, but maybe that's one way to start, right? Is to think about how do you actually bring consumers together themselves, and maybe I think a critical part of this is the employer and the relationship that they enable. But obviously, there's so much more to talk about. But thank you so much to both of you for spending the time with us, and for everyone who came as well, because I know the participant list itself has lots of people who are practitioners themselves and kind of scholars in this area. So we really appreciate all of you taking the time for joining us. And yeah, hopefully we'll see you on one of these webinars again. Thank you again, Lakshay, and special thanks to Rupal for taking the time to join us.
Thank you so much, Malvika. Thanks, Lakshay.
Thank you, Rupal. Thank you, everybody.